Welcome to Trading and Investing Lessons playlist of Lone Wolf Capital. My name is Ifeanyi, and today we'll be talking about technical and fundamental analysis. Alright, before anyone goes through the journey of trading and investing, we always think, okay, I want to trade and invest these assets. How do I go about it? Why should I buy the stock, or why should I buy this crypto coin, or gold is the buzz, why should I buy gold? Why should I buy gold and store, I'll keep, or why should I sell so assets? So there are two major methodology in determining such reasoning. So the two major methodologies are technical analysis and fundamental analysis. So first of all, we would like to talk about what is technical analysis. So from Investopedia, it says technical analysis is a trading methodology that evaluates investments and identifies trading opportunities by analyzing statistical trends gathered from trading activity, such as price movements and volume. It operates on the core principle that all market fundamentals are already reflected in an asset's price. So, example of such tools in technical analysis are simple moving average, or its other brother, exponential moving average, and other types of moving averages. We talk of MACD, which is a derivative of simple moving averages. We also talk of relative strength index, stochastic trend index, talk of volume profile, and the rest. So such tools help in making decisions on what to trade. You understand? So there are different statistical tools used in making decisions in technical analysis. While fundamental analysis is a method used to determine an asset's intrinsic value by evaluating its underlying economic and financial health. Instead of looking at price charts, analysts examine financial statements, management quality, competitive advantages, and broader macroeconomic factors to see if a stock is overvalued or undervalued. Mind you, this is not only for stock, it's also applied in things like crypto. And in crypto, we talk about something like a total value locked, or token, the yield of a token. You understand? So even in other assets like gold, silver, you talk of industrial use. You compare maybe the rate at which industries process or acquire the metals, or you talk of commodities, you talk about storage and all that. So, or weather, because you can also use weather to determine to be used as fundamental analysis to determine when there will be much bountiful supply or whether there is going to be a famine. So such things are part of fundamental analysis. And in terms of microeconomics, you talk of that's in terms of companies. You now talk of something like PE ratio, price to earnings ratio. You talk of the different other parts in book values and the rest. And in terms of macroeconomics, that's it. Talk of, if you look at a group of stocks in terms of a national aspect, country-wise aspect, you talk about things like GDP, interest rates. Those are also tools for fundamental analysis as well. So I'll start by talking about the pros of technical analysis. For technical analysis, first part, we talk about timeliness. Technical analysis allows for real-time decisions based on the price and volume. So inherent advantage of technical analysis, you can use technical analysis to time your trade. You understand? Because it's real time, you can compare what happened with prices for today to yesterday and even some days in the past. So it can help you. It helps you in timing your entry or your exit from the market. And you talk about simplicity, it often uses graphical representations, making it easier to follow than complex financial statements. So it's easy. You can easily, and for technical, you can easily make decisions by simply looking at your charts. You understand, from the statistical tools being provided by different charting tools. You can quickly make decisions, within an hour you are done. So that is one of the pros of technical analysis. And you also talk about risk management. Tools like stop loss orders can be implemented after using technical analysis to figure support and resistance levels. Also, you can even use something like average true range, which is what I also use. Those will also help you in determining the price change you can risk, you understand, to enter a trade. So one very good advantage technical analysis has is that you can use it to carry out a deep down risk amount. You can incorporate risk management to your trading system. So that's one of the very good advantages of technical analysis. That aspect of risk management is very flexible. It's easy to use in carrying out risk management. Then we talk about psychological insights. You understand? Charts can reflect market sentiment, providing a quick view of the psychology of traders in the market or a particular asset. They say when you look at the chart, for example, a candle for a doji, you understand? You look at it and say, okay, maybe the price initially went up during the day and later before closing it came back to the opening price. So something like that is called a doji. It's a psychology that, okay, maybe the buyers were first of all moving the market. Out of a sudden, the sellers overwhelmed the buyers and price started going up. So it can give you a good reflection of how the emotions that was played out in the market at a certain period of time. So that's one of the advantages it has. Then last is adaptability. Technical analysis can be used for asset classes like stocks, currencies, bonds, crypto, commodities, metals. There's no if you have a good trading system that uses technical analysis and you have a good edge, you understand, you can trade any. If you want to know if your system is very okay, there's no asset you cannot work on. So whenever, like for me, I can, based on my trading system, I can use it to trade any asset I like. I used to trade even for FX. Even for my system can trade FX, but there are reasons why I left FX, which maybe in future lessons we'll discuss about that. So that's one nice thing about technical analysis. It's versatile. You can use it for different assets. You can even use it in homing, in real estate prices pattern. You understand? So it's very versatile. So we'll then talk about the pros of fundamental analysis. First of all, it has an in-depth understanding, in the sense that it provides in-depth understanding for an asset. So fundamental analysis provides a comprehensive understanding of a company's financial health, including its income statement, balance sheet, and cash flow. And in terms of crypto, like I said, the total value locked, that can also tell you, okay, if investors are truly interested in this asset, you find out that they lock up their tokens. You understand? So in order to generate yield, and various ways of determining of carrying out some fundamental analysis in crypto as well. Same thing as in gold bullion. You understand? In grains, in terms of commodities, you talk about weather conditions, you talk about water availability, things that are a way of, you know, trying to understand an in-depth of, okay, why is this the supply and demand moving the market or things like that. So that's one part of fundamental analysis. Then you talk of long-term focus, you know, unlike technical analysis, you can just use it to check within a time frame, a short time frame. Yeah, the fundamental analysis gives you a kind of broad perspective. You understand? Is of an asset. It is particularly useful for long-term investment strategies since it tries to determine an asset's intrinsic value. So once the fundamental analysis try to give you a kind of concise value of that asset. So with that, you can now know, okay, if this asset is undervalued, if it's undervalued, you can now say, okay, let me invest a good amount of money in that asset. Maybe it's a real estate. You understand? Like fundamental analysis is mostly used in like real estate. You know, you can look and say, okay, maybe this land, government is close to a university, and they say, okay, maybe they are planning to build a new university within a certain area, or like how Dangote built a new refinery at that a site. You know, as decided that as they awarded that land to Dangote, before you know, people investment start springing out within that area because of a certain juggernaut that came within that area. So those analysis are part of things like a fundamental analysis. You understand? So also we talk of risk mitigation. You know, by analyzing a company's financials and market position, investors should better assess the risks associated with an investment. So the fundamental analysis has a good point in terms of you determine, okay, is when you check the intrinsic value of that asset, now you can now think, okay, can we have a certain amount of exposure of your portfolio to this particular asset. You understand? So for example, when gold was last year, when gold was I think last 2 years, yes, when gold was kind of trying to appreciate, if somebody did an fundamental analysis, I saw that, okay, maybe there are some factors going on in the economy that might require the value of gold to go up, because as of last 2 years, central bankers started buying a lot of gold with China. So there was a reason why. You understand? So based on that reason, in the sense of they were afraid of what as the US government weaponized their dollar in sanctioning Russia and the rest. You know, before you know, central banks started thinking, oh, this could happen to our country. Maybe we might offend the United States, and they will just seize our dollars in through this SWIFT transaction system. So before you know, so different central bankers started buying gold, initially slowly, but when they started catching up that other central bankers are doing it, before you know, there was a rush to buy gold, which allowed for gold and silver prices to rise as of last year very well. So those things are also part of fundamental analysis. So you look at the fundamental analysis, help you to look and say, okay, how much of our capital can we expose to these assets? So that's part of it. That's the risk mitigation aspect of fundamental analysis. Then you talk of qualitative factors. Fundamental analysis considers factors like management quality, brand value, and market reputation, which are crucial for a company's long-term success. So fundamental analysis also helps you to look that way too, you know, to know whether this particular asset, whether it is worthwhile, you know, based on the qualitative factors. Then lastly, talk of the same thing, adaptability. You know, fundamental analysis can be applied in various asset classes, including stocks, currencies, bonds, crypto, and the rest. So that's for that. Then we'll talk about the cons of technical analysis. You know, first of all, it has a self-fulfilling mindset on its own. Saying that popular indicators may influence investors to make similar decisions, skewing the market. So no, it's a way a particular tool, a statistical tool will be biased to say, okay, maybe the market could drop further. When most market participants see such thing, they act in the same way. Before you know, it fulfills the nature of the indicator itself. So that's one of those things. In talk of noise, due to short-term fluctuations, can generate false signals, and this do happen. That's why in trading, I can say that yes, my system can work well, but sometimes can give you false signal. It can tell you buy, but later the market starts going the other way around. So you also have to act fast and close the trade and follow the other market direction. So that's one of those cons in technical analysis. Then you talk about subjectivity. You understand? The approaches, patterns, and indicators can be viewed differently depending on the analyst. So I might see this technical analysis, this tool, it might be telling me to buy. Another trader can use that same particular time frame, look at it and start saying no, the market is going to sell. So it does not have, it's not an absolute value. It's not absolute indicator to say this is must. This if he says buy, everybody will buy. So the different trader can come, look at that particular, use that particular tool and make a very different decision from another trader as well. So that's for the technical analysis. In terms of for fundamental analysis, when you talk about the cons, we talk of time consuming. Fundamental analysis is labor intensive, requiring a deep dive into financial statements, market trends, and economic indicators. So there's a lot of things you can derive to analyze an asset fundamentally. So it can be time consuming, and even to even get some of those data can take a lot of time. So that's one of those things, the cons of fundamental analysis. When you talk of short-term inefficiency, it may not be as useful for making short-term trading decisions. That is one of these major backdrop. You can use it to make short-term decisions because of time lag and getting some data and the rest. When you talk of subjectivity as well, it also has a subjectivity issue. In terms of qualitative factors, there are some certain qualitative factors we try to get. It cannot be easily quantifiable. You understand? So it can be subjective, and that person can come reasoning about that qualitative analysis, maybe in terms of a market brand of a particular product. You understand? They can rate it higher, and another agency can come rate it lower. So one thing about it is that everybody cannot have the same view. Same thing that also happens to technical analysis as well. So what was it? Also, one of the cons as well. One of the cons as well is lack. In terms of technical analysis, it says lack of fundamentals. Technical analysis generally ignores the underlying financial health of assets and focuses on historical price patterns. So whenever you are using technical analysis, you don't think about fundamentals. You don't think about the history of that particular asset. What you just look at is the chart. If the chart tells you buy, you buy. If the chart tells you sell, you sell. So it does not have any room for you to understand that particular asset. So that's one of the issues with technical analysis. And also, you talk of information overload. That means that there are abundance of different indicators. If you open TradingView, there are so many indicators that people can generate. So it can lead to analysis paralysis as well. You understand? Same thing applies to fundamental analysis as well. You can have different types of economic, financial data that can be generated. So if you're not careful, it can lead to analysis paralysis as well. And also for fundamental analysis, there's also market irrationality, in the sense that the market does not always reflect the intrinsic value of a particular stock, especially in the short term. For example, just this US-Iran war, when the war started, yes, prices were crashing. Then out of a sudden, prices started going up, but there's not been any deal. There's not been the ceasefire. In short, as Trump announced ceasefire, and they were still fighting. Before you know, market was going up. So, so that's one of the cons, the major cons of fundamental analysis. Like they say, market can remain irrational longer than you can remain solvent. While people always fall into this trap because of fundamental analysis. So your analysis might say, oh, this company is making sales, is doing everything right. But before you know, it is crashing. Why is it crashing? You not say, oh, maybe because it's a software company. AI is now is disturbing softwares company, because you can use AI to generate some of those things that those software companies were generating. So though the company is also making profit, but before you know, the price is crashing. So that's part of those things about fundamental analysis. That's the backdrop of fundamental analysis. So in other words, the thing is that in trading and investing, it's not best to use only one methodology. You can incorporate both methodologies. You understand? For example, for me, I employ more of 90% technical analysis and 10% of fundamental analysis. You know, the fundamental analysis aspect for me, it can just kind of point me to where I'll say, okay, maybe money is flowing to this kind of assets. I might suddenly allocate more of my capital to that kind of asset. You understand? So different once you start the journey of trading and investing, you understand, you try to expose yourself to both technical and fundamental analysis. You understand? Depending on your type of personality, the type of trading style you employ, you might determine whether you use more fundamental analysis or more of technical analysis. So those are that's one of the major ways on how to use both. You don't mostly use one particular methodology for everything, so you have to employ one or two at the same time. So in conclusion, we say fundamental and technical analysis serve as critical tools for those in the market. Fundamental analysis focuses on financial statements and economic indicators to assess intrinsic value, making it more suitable for long-term investment decisions. Alternatively, technical analysis examines share price and market movements and trends to identify investment prospects. While fundamental analysis is often criticized for being time-consuming and less effective for short-term trades, technical analysis is chastised for looking less at value than the trends of share price movements. Then, many investors and traders opt for a blended approach, just like I said, leveraging the strengths of both, as is often quickly put. Fundamental analysis provides insights into what to buy, while technical analysis tells you when to buy or sell. Ultimately, the choice depends on your trading style and investment horizon, and financial objectives. So, like I said, one of my major use of technical analysis is you can use it to time the market. Anybody that says you can't time the market, yes, you cannot get the exact bottom to buy, you might not get the exact top to sell, but it can help you know when to buy, not to lose a lot of profits, or when to sell, not to lose some of your profits when trading and investing. So you have to find a way to incorporate both, whether it is 90 to 10, whether it is 10 to 90, whether it is 50-50, whether it is 60-40. So depending on how your trading style, you now determine, okay, which one you pay more attention to than the other. So that brings me to the end of this topic. It's a very interesting one. Go through it very well. From there, you can now determine, okay, how do you want to approach the market in any way you want. So that's for this lesson, and don't forget to like and subscribe. It helps it helps the algorithm to show my contents to more viewers, and also help me in this journey of trading and investing. So see you next time. Thank you. Bye.